Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. The first week of President Trump's term was exciting with executive orders on hot political issues, but markets await his approach to the issues that could affect the Fed's path. This includes the plan for tariffs, the scale for the proposed tax cuts, and possibly the impact of deportations of illegal migrants on the labor market. This week is data and event heavy. There's a lot of growth and inflation data from both the US and Europe, as well as rate decisions by Canada, US, and the EU. Good morning, JK. How do you think the markets are placed after the first week of President Trump's term?
Good morning, Swaraj. Yes. Yeah. So the last week was a period of relief for the markets after Trump avoided, I would say, announcing tariffs on various countries on the first day of his office. His executive orders were focused on migration, taxes, and other domestic related laws. And we did have a rally in the bonds, yields falling a bit, and then dollar also fell almost to 2.5% from the high that we made at 110.18. Now the question is whether this relief and relaxation can continue for the markets. I doubt very much because we are in a negotiation stage. So it's not as though Trump has cancelled the tariffs, or he has not said he won't impose tariffs, but he is awaiting responses from various countries for the what they are expecting from them with regard to U.S. Relations. So one of them is, of course, the deportation of illegal immigrants to Mexico. And what we have seen over the weekend was there was a attempt to, or rather, there was an effort from the U.S. Side to send some migrants by a plane to the Mexican region, but it was stopped from the Mexican side to land, and so there is the tension has risen, and in fact the Mexican peso has fallen after Trump's imposing tariffs and sanctions on Colombia to accept deportation, and also even threatening similar action against Mexico as well. So this is an ongoing thing. This will continue to haunt the markets, and there's no time to actually be relaxed about until we see how these negotiations go about. Apart from that, we also had last week, the Friday, we had some Friday and Thursday, we had some data from US. It was not so strong. The jobless claims rose from a low of 2 lakh 2,000 to 2 lakh 26,000, but it was put down to the problems arising from the fires in California state, and also some seasonal factors due to very heavy cold weather. But we are also looking at a big rise in the continued claims, about 46,000, and that could be a better indicator of how the job market is performing. But as of now, this is not a concern. Job market still looks resilient. And then we also had the PMI, the S&P Global's PMI number from the US, where it showed the manufacturing slightly improving and rolling over to positive territory, whereas we saw the services PMI actually slipping quite a bit from 54 to 51.1, and that was some drop which should be taken note of, because services side has been holding up the US economy. Then the final consumer sentiment on the on the Michigan sentiment survey also showed a drop of, from 74 to 71, inflation expectation rising. So all is not settled. We have had the inflation expectation, which rose, but possibly if the tariffs are not imposed, they will react to, a lower inflation expectation as well. But by contrast, we had improvement in the PMI and the numbers from the Eurozone. Their composite PMI has increased to 50.2 from 49.6. The first time expansion of Eurozone private service activity from August 2024. Services sector, was as well as the manufacturing sector both improved. Now, the biggest event, of course, was on Friday when Japan hiked rate as expected to 0.5%, the highest level in 17 years. But of course, that was in line with the market consensus as well. The move reflected the wage hikes and also the steady progress in inflation to the upside. And in fact, Bank of Japan has also indicated there will be more rate hikes depending upon how the data evolves. Considering these actions, reaction in yen as well as the Nikkei stock market has not been very significant. We have had the yen moving between 155 and 157, and even the Nikkei was stable, was not falling. Just remember that when they hiked last time the rate to 0.25%, there was a violent reaction in the stock market as well as in the yen and as well. But then this week is significant for two things: that China will be closed from tomorrow for the entire week, so the liquidity in Asia will be dry. At the same time, it will be a very busy week for Europe as well as US. Europe has E4 business expectations, and then the ECB rate decision on Thursday. US will have the Fed rate decision expected to be kept on hold, but the focus will be on how they view the situation going forward. Inflation has been stable, but still stays over 3%, well above 2% target of Fed, and also their expectation of future inflation as Trump executive orders have been in place, except for tariff, and how whether they see still room for some uncertainty. And the most important point I would like to hear from Powell is Trump saying that he will talk to Trump saying that he will talk to Powell and will want to see that interest rates are lowered. But what is the basis on which Fed will lower the interest rates? In my view, they will have to remain objective, look at inflation and growth, and take a decision accordingly. So apart from these, we also have the GDP number on Thursday and the all-important core PCE number on Friday. So there's a lot to look forward to from the markets. As far as the rupee is concerned, yes, it was some relief to see the rupee gain once again to 86.20. But then you have to see that last time when it slipped, first time when the tariffs were not announced on the first day of Trump's taking over, it had fallen to as low as 86.06. Then this time it's only fallen to 86.16. This region is where a lot of demand is there from importers as well as the FIS, and let's also not ignore the fact that FIS continue to be sellers now. For the month of January, it is about 8.5 billion outflow that we have seen, and from October, we are witnessing almost a 20 billion of outflows from FIS. So, although rupee has followed the DXY on the to strengthen a bit, I don't think this can in any way be called a trend change. It's only a correction, and this correction can get aborted anytime, and then it can once again rise towards the highs of 86.70 once again. But then we might still remain in this region of 86 and 86.70 for some more time. We also have the budget on this Saturday, which the market would like to watch, and whether it changes the FI's approach, because the index has fallen about almost 13%. That is in line with the overall emerging market index. And also, if non-index stocks have fallen substantially between 30 and 50%, there could be some value buying from FIs going forward. But then they may still wait till the budget. Overall, I think dollar rupee remains in this range until this weekend. But should get the direction later. If at all dollar index falls a lot more, then the rupee can break 86 and move towards 85.50. Thank you.
Thank you, JK. And just quickly summarizing, the one important thing which we got was the last week's theme was markets having a relief because tariffs were not immediately announced after Trump taking office. But it's important to remember that all of this is just temporary. Like on the first week, he focused on the political issues. But tariffs are not completely off the table. It's just a negotiating tactic. For example, Colombia has gotten hit with tariffs after they refused to let a US military aircraft land because the US military aircraft had migrants on board. So they have been hit with tariffs of around 25%. So it's important to remember it's a negotiating tactic. So there may be more to come. With respect to the data released last week, job market data from the US still showed a resilient picture. Manufacturing PMI from the US improved while services PMI slipped. Consumer sentiment also showed a drop. And of course, last week, Bank of Japan hiked rates on Friday to 0.5% from 0.25%. It was a long time coming, as shown by the data leading up to it, higher inflation and wages. And as BOJ mentioned, that there will be more hikes. And as of now, there seems to be no major reaction similar to what had happened last rate hike. Rupee also gained on Friday, but it's important to remember that FIs continue to sell. January has already seen around $8 billion worth of outflows, and as JK mentioned, this may just be a correction and not exactly a trend reversal. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.